Hello traders, Gary Wagner here, just about 11 o'clock in Honolulu, 5 o'clock in New York on April the 6th, 2014, Tuesday. This is the daily report for gold and silver. We do have very slightly lower pricing in the precious metals markets. Gold and silver, platinum and palladium are trading slightly higher today. First to gold, as you can see, it's just closing and getting ready for the afternoon session break to take place. Currently, it is trading off about $1 to $2, 1307.55 current print. Low on the day above 1300, significant. We'll talk about that in a second. 1303.90. The high 1315.50, and current, call it 1307, 1308. Silver, very quiet day, off about 2 cents, so let's call it in essence unchanged. 1955, the low 40, the high 79. More on silver towards the end of the show. So traders, proverbially, I have good news and bad news. The bad news is gold is not trading higher today, as I said, off $1 to $2. But the good news is that it has effectively closed above $1,300 per ounce. And to me, that's significant, and that's a level we absolutely would like to see it hold. Now, 1,300, when we kind of draw our line across it so we can see the recent activity, and this, of course, is a 1320 chart, short-term chart, variable chart, and we've got about a year's worth of time in there. So we can see that really when we look at it, there doesn't seem to be a lot of play around this area. You can see it shoots right past it here, and this is during that big rally, the rally in the beginning of 2014. Market comes down, really no action there, so it doesn't really seem to be a very strong technical level. And when I say technical level, what I'm referring to is the fact that when it hits that point, it does something in particular. Technical resistance, 1328 to 1333. You can see as the market comes up, it hits this particular top and bounces down. So that's where we actually have some technical evidence that that number is important, so to speak. Now, when we look at this market, and if you recall from yesterday's show, I talked about our first real level of resistance being at around 1312. We can certainly see that today, because as this marketplace moved up, and we're looking in this area right here, but as this marketplace moved up, it did find resistance just above there. I believe the high was 17. It could have been 15, but right around that area. And 1312, at least for the time being, is held. Now, in terms of real support, I'm showing it at about 1287 to 1285, and that's a 50% retracement, and it's a 50% retracement of this big move here. So traders, on Friday, I talked about the fact that we are going to look to trail this stop up. Yesterday, I also mentioned it. Now, typically what I look to do at minimum in terms of a trailing stop is you want to keep it below the low of the last 3 days. Now, when we consider that, let me go ahead and kind of blow this chart up so we can really look at these last 3 days. Let's go ahead and pull it over. And I brought up a crosshair bar, and this is going to give us different indications. This, of course, is today. This is yesterday, and this is the low on Friday. Now, when we look at the low on Friday, 1272.84, 1272.84. So you want your stop below 1272.84, but our stop is currently sitting below 1268. So if you want, you can trail it, but you're only going to trail it by about $4, because we need to keep the market itself, in terms of the volatility, we need to keep that in check so that if the market has these gyrations but is moving in the direction we anticipated, of course, we're able to sustain the position, stay in the position, so to speak, and at the same time profit when the market moves in our anticipated direction. And the other thing is that stops with gold are tricky because you do get these tremendous volatile swings in the marketplace. And so we want to protect ourselves, but at the same time, we need to give it enough room, of course, to be able to work within the basic range. Now, we're looking at our daily chart. Our daily chart is giving us a couple of ideas of what we're looking for the market to do. Of course, this is that same fib retracement, the $200 rally. You can see 1287. This is our current resistance at 1312. I believe we have another level of resistance here at about 1333, 1327 in that area. And then we have the mother of all resistance. This is where I think the rally could take us to. If in fact it develops some steam, I think we're looking, and this is not in one wave, we're going to have peaks and valleys. We are going to have points in which the market runs, points in which the market runs back. But I think that in terms of a basic upside target in where we could go on this particular wave, it's probably to test the 1391. Now we have a lot of ground to cover prior to getting there, and the first real thing is we got to get over 1312 on a closing basis. Haven't done that. After that, what do we got to do? Well, 1325 to 27, that's going to be the next level. Now if we then look at this chart for reference points, we can see this top here. And this top here occurs at what? 1360. And then we've got a top. This top is above it at about 1435. That was that record top. This is back last year. So we had really two real rallies over the, call it the last year. If we look at this calendar year, July to July. And these two rallies really were $200 rallies in which we saw the market move really from these same lows, these equal lows, and this time to a lower high. Now, we are looking at a daily chart, and I put the daily chart into Japanese average format. What we want to ascertain really is strength of the trend. Now, this looks different than some recent trends we've had in terms of similarities, and not lengthwise, but you can see that here that the price itself, you get this initial rally, nice size, body size, but you get some side movement, pop up, side movement. So you're not getting the kind of straight progression that we might see in some rallies on the Japanese average chart, such as you get here. The same with this, you get a little bit of sideways action. Now, when we look at the activity here, a couple of things are quite evident. Really strong support down here. This is 12, I believe 72 to 68 in that area. And we had one really defined rally, all straight green, a really defined correction, all straight red. We then went into a couple of days of green, then we corrected. Now we're back into a couple of days of green. Now realize, even though the day has a slightly lower pricing on the day, 1307.37, looks like that's where it's going to close. It is green because it compares it to the midpoint to the prior candle. Very, very small range. And what's significant to me is what I'm looking at is strength of trend. And when we look at it through the eyes of the Japanese average charts, that strength seems to be waning a little bit, at least for today, because you can see we've got a very, very small body size. Now, does that mean that the rally's over? Well, we can see many points where you get these small body sizes just prior to the market really taking off. And really, as I've said before, right now what we're dealing with is a market that is gaining and losing premium due to safe haven investments. And what is going on in Russia and the Ukraine right now, at least in my opinion, is escalating, not de-escalating. It is getting closer and closer to a war. You've got the Ukrainians that actually went back and fought back against the militants, whether they're Russians in unmarked suits or people that are from Russia at some point. All of that to me is irrelevant. What is relevant is the fact that we have some geopolitical uncertainty, and this is different than some of the geopolitical uncertainty we've had in the past. So the reason I say it's different is because it involves a superpower. It involves Russia. So when we have a skirmish that's in the Middle East, it's terrible, it can be severe, but it's not the superpowers. And when you've got a scenario right now where you've got the Russians taking land from the Ukraine and trying to get more of the Black Sea, it's a powder keg, and I believe it's a powder keg that could genuinely explode. And if it does, traders, if it does, I could see this market taking off and moving to much higher ground. At the same time, if there is a peace accord that is struck, we could see the premium erode very, very quickly. So we want to be sensitive to the fact that this market is moving rather than economic news on geopolitical uncertainty. And when you get something like that, the odds for increased volatility are amplified tenfold. So what about silver, that white precious metal? You know, it's currently trading 1954. It's trading under 1958. To me, that's a pretty critical line in the sand. It was an important fib number that we've talked about for months, really. I could show you where it comes from, but due to time, I'm simply going to point out that it is important. Right now, you can see that we had support here. We're now currently having resistance. If it cannot break above that, my thought is it really has only one place to go, and that is down to about 1900 to 1870 on the low side. That's based on these series of lows here. If it can, in fact, break above that, I'm looking at my upper target still at around 2025 to 2050. It's these candles here with the extreme highs at about 2050, and that's due to these tops right in here. So I don't see a tremendous range, maybe $1 on the upside if we break above this and gold runs, or if it's neutral and we're kind of slowly moving up, I could see silver moving sideways. So again, we want to maintain our long gold position, stay on the sidelines with silver. This has been Gary Wagner, wishing you as always good trading. We will talk to you tomorrow for another daily update and review. Bye-bye.